Hey folks, it's about time we update the Canadian real estate market. What the heck is going on? Are the market crashing? Are we going to recover? What's going on with variable rate mortgage? There's a lot of weird data we're going to be talking about in this video, so hit that like button. But take a look at the Toronto Real Estate Board stats. Year over year, guys, the volume, my God, is down 44%. You think that would drive lower sale prices? But hey man, homes are still selling and they're only down about 16.4%. Not all that bad when you're actually looking at Toronto real estate. If you're a new buyer, yeah, these prices are still relatively insane, but it's nice to see condos coming well down below $1 million. You can get 2-bed, 2-bath condos now anywhere from the 700s to the $1 million price. That's really not that bad for new buyers, right? But that's not the data that I think is driving the market right now. It's the confusion around the actual rental prices. If we scroll all the way down here and just take a look at total apartment rentals, they've actually dropped by 20%, yet the one-bedroom apartment rent is up 19% year over year. This is causing a lot of concern because these prices are actually still rising. We're going to discuss that with the Bloomberg video interview that we're going to kind of react to. But one of the things driving a lot of this, let me zoom my face out of the way a little bit here, is the apartment rents are soaring in Canada's cities. You can see Halifax, Toronto. Year over year, these prices are up a lot. Like we're getting into the above 5% digits here, pretty much across the entire board, which is primarily related to the immigration. And it also has a lot to do with schooling. With our world-renowned education system, we have a lot of foreigners coming in to be educated, looking for rental apartments as well. So the migration is a good thing for the economy. It's bad because of housing restrictions and the lack of new builds that are just going on. But this is what drives stock performance. This is my bullish thesis that will continue to be in the Canadian economy because we're like a monopolistic place, man. Our banks, there's like 5 of them. Telecom giants, there's like 4 or 5 of them. Like there's nowhere to go to actually get like diversification of products. So that drives growth in all of our sectors, which makes it good to invest in the Canadian economy. It just makes it hard to buy or rent a place right now. But hey, it hasn't stopped the likes of Reynolds partnering with real estate developers to purchase the Ottawa Senators. So clearly developers might still be doing okay. But we'll talk more about the variable rates, some of the crash potentials that could still come up in the near term that could make good buying opportunities for you. But we're going to react first and foremost to a video coming out of Bloomberg that I thought was just really interesting. So take a listen.
For the past 25 years, Canada has been in the grip of the world's biggest housing boom, a near unbroken run of price appreciation that's unparalleled among developed peers. But now with rising rates, a slump in home sales, and potentially further to go on price declines, will Canada set an example on the other side of things, on the way down? Let's bring in Bloomberg's Kevin Orland. It has been a local housing market, I should say, Kevin, that has captured global attention. What are you watching for?
And one of the main things that they'll be watching for is what level of forced sales do we see in Canada? Obviously, we've had a very long run of price appreciation here, but with inflation rising in the last couple of years and the central bank rate increases, we've seen home prices come down 10% off of their peak. That's the kind of thing that investors will say is sort of a normal course correction. But the threat is that those rising rates will force people to sell their homes, and that could sort of kick off a self-perpetuating cycle of price declines that gets a little bit more severe.
I don't know who's clicking in the background. It's driving me bonkers. But nonetheless here, folks, this is going to get real intriguing from a variable rate mortgage standpoint. I was just reading an article. Don't know if it's factual. A lot's going to come into bank earnings to reveal some of this. But there's over 30% of outstanding mortgages right now are variable rate, which is kind of horrifying to think about. Those people are going to be under a lot of pressure. I think there was another article stating that like almost 50% or 30 to 50% of homes in Canada are completely outright owned, probably by boomers, people like my parents. But still, man, to have that many variable rates, I think it's like a couple $100 billion in value. It's some sketchy stuff, but let's continue on.
We're going to get a real sense of that as well when the banks start to report their earnings, and it takes a lot. I think about the crypto sell-off versus, the housing market crash. At the end of the day, you can sell crypto because you don't need it for anything, but the home is going to be the last thing that you sell, right? Because it's of vital importance, and it tends to be the last thing that you are willing to sell. So you have to be talking about a situation where we're in pretty severe, dire straits economically for people to be making that decision.
Yeah, I would agree. I know people that are stuck in variables, but they're able to afford it. I mean, even though prices have gone up over $1,000 a month. I mean, you're getting like 1.5%. Now you're probably like 6% or something just crazy like that. But still, I think this is causing mass immigration, which I've talked about, over into other provinces like Alberta, where home affordability is way higher than Toronto, Vancouver. The prices here are nuts. Unless you're making 6 figures a year, probably not the place for you to live, or hell, even go to school for that matter. I don't know how kids are affording school here. It's just nuts.
That's right. I mean, like I said, we talked to a few people, for our story who had no other choice really. They had to sell their houses. One was, a person who bought a condo as an investment, and their mortgage costs went up way beyond what they were, generating in rent, so they were forced to sell. Another was someone who, had to take on a couple of extra mortgages during the pandemic to make ends meet, and then when the price on all of those went up, they were forced to sell. How widespread that is will be a big factor. And so far, we've seen the banks have, record low and even decreasing levels of impaired loans. Last quarter, the loans that people weren't paying ticked down to, the lowest that they've seen in years. So we haven't seen that phenomenon yet. You're right that the mortgage will be the last thing that people stop paying. But the flip side of that is, people do have the option to try to sell if they can to offload some of those costs.
So I always kind of come back to the same point with this, that if you have cash, no debt, this is the time, this is a once in a lifetime opportunity to buy a house. There's going to be so many people under stress with variable rates looking to get out. If you can find that opportunity, maybe get a 10-20% discount even below the current discounts in the market, because there's just no transactions and people get desperate when nobody's buying, right? So I'm looking at real estate maybe this year, something into consideration for myself, but I'm definitely going to be paying attention to those bank earnings coming up at the end of the month. Consider subscribing for that. But I gotta know, what do you think about the Canadian real estate market?